and baton to him. A small, quick, of course, all of you know him. Mr. Setty has joined the board of SBI as Managing Director in January 2020. And currently, he is heading international banking, global markets, and technology wings of the bank. Prior to this assignment, Mr. Setty headed retail and digital banking vertical. He has also been heading various task forces, committees formed by the Government of India. A Bachelor of Science in Agriculture in this agricultural conference. Huge round of applause for that, because agriculturists can do anything. So he started his career with State Bank of India in 1988 as a probationary officer, across a career spanning over 3 decades. Now you see where he is. Mr. Setty has held key assignments in State Bank of India, including Deputy Managing Director, Stressed Assets Resolution Group, Chief General Manager and General Manager in Corporate Accounts Group, Deputy General Manager in Mid-Corporate Group, and Vice President Head Syndications in State Bank of India, New York branch. So Mr. Setty, we personally feel honored. A standing ovation from my batchmates out there. Thank you. All yours.
Thank you, Raj, for those kind words. Good evening, friends, and namaste. It's really an honor to come here and speak. I know that a lot of veterans in agricultural field is here. I'm reminded of a small personal anecdote which I would start with. When I got my appointment as probationary officer in State Bank of India, I went to my advisor, guide in those days. He was guiding me in my master's in agriculture. He was astonished that I was joining a bank. He asked me, "Do you mean really to say that you're going to maintain my account, debit, credit, and all these things, leaving agriculture?" But anyway, I ended up in this great organization called State Bank of India. Never realized that during my student days, when they talk about All India Rural Credit Survey, I think many of these agriculture students would remember this. In 1954, when this committee was formed, the committee suggested formation of a bank which can focus on rural credit. That is how State Bank of India came into existence in 1955, transforming from Imperial Bank of India to State Bank of India. So in terms of the commitment for the rural credit, I think it continues to be a biggest focus for State Bank of India. Just to give you a figure, out of 2 crore borrower customers what we have, more than 50% are farmers. I think our commitment to rural credit continues to be there. And it is not only in terms of direct finance to agriculture. We are the largest inclusive financing bank in the world. Out of 470 million customers State Bank of India has, almost 200 million customers are financial inclusion customers, out of which 135 million customers are the customers who started their journey in banking through their Jan Dhan account, zero balance account, first time introduced to the banking. So the concept of financial inclusion, which started, the journey of financial inclusion started even before the term is coined in 1954, continues to be there with SBI. And I'm proud to be here to share a few thoughts on the topic which is given to me in terms of how do we innovate in the agricultural financing space to reach, the improved agricultural production in 2030. I think a lot of you have spoken in terms of various developments which are happening in agriculture. And also I had happened to listen to the panel on the sustainability in agriculture. I was in the first week of this month, I was in a conference called European Banking Executive Conference, which is all European bank event. But they wanted to hear Indian version of what is the just and equitable transition to net zero in 2070, what India is committed for. And they invited me as a special guest from India to represent State Bank of India. And many of those ideas have resonated with what we presented in those conferences in terms of, it's not only about our commitment for emission reduction and net zero by 2070, but how do you transition to ensure that it is equitable. It's not only, I mean, most of the emerging countries is not only that we need large amount of capital to move there, but we have to ensure that the aspect of nutrition is taken care of. I think many speakers have spoken about it, and how the transition has to be equitable. And I'm glad that this event also has covered those vital topics in terms of the transition to the net zero commitment what India has promised. Coming to the current topic, of course, 2030 has also a great significance in terms of 2-3 data points. One is, today, India is the 5th largest economy. And the estimates place that by 2028 or 2030, we would be the 3rd largest economy. And I think 2030 has a significance to that extent. And as you know, we have almost census-wise, statistically, we crossed China in terms of most populous nation. And by 2030, we will have 1.5 billion people residing in this country. So that is another important milestone for 2030. And if you take all these elements, and also consider that more than 50% of the labor force is still engaged in agriculture, though the contribution of agriculture to GDP has come down to 18%, there's a very substantial employment potential of agriculture. There is a need for improved productivity and need for improved practices and need for innovations in one of the most element inputs in the agricultural production, that is credit. So when we talk about the innovation in the agricultural financing, I think what comes to my mind is, now you have large institutional agencies like State Bank of India. Still agricultural financing is done through this institutional financing. While non-institutional or non-formal credit continues to be a significant portion, the technology can play a greater role. The larger institutions have 2 biggest problems in reaching the last mile connectivity. One is their operational costs are very high. How do you ensure that your small value rural credit is made available to them at a lower cost is an important problem which we are all grappling with. And that is where the fintechs can play a significant role. I'm not talking about the agri startups. I think many of you have come with very improved practices and immense role startups are playing in terms of increasing the productivity, improved agronomic practices in agriculture. But it is very disturbing to note that large number of technology companies are not moving to the financing technology in agriculture. Just to give some small statistics, in the 2022-23 financial year, the Government of India had expected commercial credit to agriculture to be around 18 lakh crore disbursements, out of which, if you see the fintech role, agri-fintech role, they just disbursed 18,000 crores. So the role of fintechs to be multiple levels to grow in the agri-finance credit is important for 2 reasons. One is they can provide the last mile connectivity to the large financial institutions, number 1. Number 2, deliver the credit at a lower cost. I think these are the 2 things which the fintechs have to really focus. And there are 2 important concepts which we keep talking about in the policy making is that the role of fintechs is that you have to focus on inclusion, number 1. Number 2, aggregation. When I talk about inclusion, there are a large number of farmers or people who are involved in farming who do not have the formal title to the land. So sharecroppers and all those people who have been part of the institutional credit system, but they still find it difficult to raise the small value credit from the banks. Probably the fintechs can play a greater role in there. And the fragmented land holdings also, cause a larger stress in terms of consumption of the credit which is made available. That is where the aggregation comes into picture. And the Government of India has been focusing largely on the farmers, producer organizations, and hopefully the revival of the packs and combination of FPOs is going to help in delivering the credit to the aggregations, what we call collectives like FPOs and packs. And there also the fintechs play a greater role. And as far as the large banks, what are these large banks are doing in terms of technological innovation to deliver the credit to the farmers in a more seamless manner and in a cost-effective manner? For instance, State Bank of India, with the Government of India as well as Reserve Bank of India, we are embarking on a paperless journey for Kisan Credit Card. You are all aware, right? KCC loans are the fundamental credit inputs which are made available to the farmers. And these inputs, the credit input, is a time-consuming process for the farmer. Every year he has to come to the bank and submit all his papers and what crops he is growing and give the title of his land, continue to hold the land. And then the crop loan is reviewed. The KCC is reviewed for him for one more year. So today we have embarked on a paperless journey and completely a digital journey where on the mobile the farmer can review his crop loan without even visiting the branch. We have realized that millions of farmer days across the country are wasted by visiting the bank just to renew or review his crop loan. And this is going to be a phenomenal change in terms of farmer productivity. I think the number of millions of man days which we are going to save. So similarly, I think the technology which is made available in the satellite imagery is also helping us to assess what crops the farmer has grown in the past and what is the current crop status. And without even visiting the land, we are able to assess his cropping needs, and the technology is helping us to reduce the cost of delivering this credit. The third point which is coming out is the Government of India, similar to what they have done in the payment systems. You may be aware that UPI, which is now the predominant mode of payment system here, made India one of the most matured payment systems in the world. On a scale of 1 to 5, India stands at 5. I think nobody in the developed nations also have not reached the maturity level in the payment systems what India has achieved. So there is a word called JAM Trinity, that is Jan Dhan Yojana, Aadhaar and mobile, have transformed our ability to penetrate the payment systems across the country. And UPI, JUMU, JAMO Quartet, what I call, is going to transform. If we can, small value credit can be made available through the UPI. As you are aware today, UPI is from one deposit account to another deposit account. That is what is allowed in the protocols. And in the last review meeting, RBI has announced that even the credit card can be linked to the UPI payment. Then the next step, what we are recommending to the government is that whether we can make small value loans from the institutions or through the fintechs to the rural masses, including the farmers, through the UPI rails, NPCI rails, which will substantially reduce the cost of delivering the credit, agricultural credit. And there are so many things what gladly the Government of India is working on the fintech space, and the banks like State Bank of India are focusing on. And one of the important steps which Ministry of Agriculture has taken is the Agri Stack, similar to the payment stack, what is developed under the NPCI. They are developing the Agri Stack, where the digitalization of the land record which had happened, I don't know how many of you are aware, today 94.5% of the land records in the country are digitized, which is a phenomenal achievement. I don't think any emerging nation has achieved this kind of level of digitalization of land records anywhere in the world. This digitalization of records is going to help us to provide Agri-Stack similar to the payment system. One example of what we are doing with Karnataka state government, for instance, they have a portal called Fruits. And here, the complete integration with State Bank of India is done with the Karnataka state portal, where we are able to access the land records. And one recommendation which I made to the Government of India is that today, up to 1.6 lakh rupees, the farmer gets the collateral-free loan. That is, no mortgage is created on the land. Above 1.6 lakhs, though the banks are permitted to give the loans without collateral, no bank gives because it is up to 1.6 lakhs is the limit. They all stop the loan. Even if the farmer requires more than 1.6 lakhs, they're stopping at 1.6 lakhs. I suggested to many state governments, you just give me the access to your land records. And I will record only my interest of having given the crop loan. I don't even create the mortgage on the land. This will enable me to prevent any alienation or sale of land without paying my crop loan. And I'm willing to give up to 3 lakhs, 5 lakhs without asking for any collateral. And Karnataka is the first government which has come forward and has implemented this system where the interest of the bank is noted in the digital record in a seamless digital manner, end-to-end integration with the banks. So I think there are umpteen number of things which is happening in the financial space, similar to what you have projected in terms of your improved crop practices. I think the government is very serious. How do we make this credit available to the farmers at their doorstep in a very, very cost-efficient manner? And this last mile connectivity, of course, has to be provided by the fintechs. If any agri-fintechs are there in the audience, I would definitely request you to focus on what could be the collaborative approach, what we can do with the institution, large institutions like State Bank of India, to make the credit available to the farmers, and which is the most critical input to ensure that the productivity of agriculture by 2030 actually takes off. With these thoughts, I will stop here. I don't want to take longer time, but the effort of the agri industry, effort of the financial system, and the effort of the governments, both at the state and central government level, are really going to be transformative for the agriculture and on the farmers in terms of increasing their earning capacity, livelihoods in the rural areas, and overall food security of the nation in the years to come. Thank you very much, Raj and Anita, for giving me this opportunity and to be here. Thank you.
Thank you so much, Setty Garu, but may I request you to please be with us up here on stage, I'm sure.
Thank you, Mr. Setty. I know it was such a seamless thing. We hear so many bankers speaking, but you see how simple he made how things can work out. So this is a time to thank him, honor him, since he has come all the way this afternoon to be with us. And incidentally, he has to leave now. So we'll have to excuse him to go elsewhere. I request Dr. Malhotra to please come and do the honors to Mr. Setty.
Thank you very much, sir.